past member, IITA Life of India, Mr. Navagopal Bonik, past member of the insurance, Mr. Joydeep Roy, partner, PricewaterhouseCoopers, Namgyal Len. Ladies and gentlemen, it is indeed my pleasure and privilege to extend a warm welcome to our guests attending this from Bangladesh, for Indian Chamber of Commerce to organizing the third Emerging Asia Insurance Conclave and Awards, and to acknowledge, honor, and recognize insurance companies expected to overtake the developed economies in terms of GDP growth soon. We have at today's the Asian countries. I believe that the launch of the Insurance Awards, along with an international panel discussion on handling current and future pandemic and Asian, this would be the theme, will become an important forum to better understand the regulatory frameworks, the market infrastructure, and also to forge greater cooperation in areas of common interest. It also gives me immense confidence that with vaccination being rolled out across many countries and international travel being slowly allowed and permitted, the Indian Chamber of Commerce is planning to organize the third Emerging Asia Insurance Conference in the coastal state of Goa in India. Indian Chamber of Commerce, as many of you are aware, was founded in 1925 as a leading national chamber of commerce during the British India days, with significant operations in Kolkata, in New Delhi, Bombay, in Guwahati, Hyderabad, Bhubaneswar, Ranchi, Agartala, Siliguri, to name a few. ICC organizes various conferences, summits, symposiums concerning different sectors of the economy and lead many bilateral trade delegations across the world every year. The Chamber has proven capabilities in business development across geographical boundaries and, of course, capacity building. With over 95 years of service, we are working proactively on key issues impacting sectors like agri and food, energy, healthcare, minerals, logistics, environment, tourism, startup and innovation, and of course, banking and insurance, and have focused on skill development in all sectors of the economy. Insurance over the last 500 years has emerged as an effective risk management strategy to protect the individuals and institutions from financial losses arising out of unforeseen contingencies. With rising uncertainties in life, crop losses, health emergencies like what we are having today, and financial downturn, insurance has become an extremely useful mechanism for coping with the losses and cushioning the impact. The third Emerging Asia Insurance Conclave and Awards could not come at a more opportune moment. I believe this forum offers us a great opportunity to engage with our friends from the Asian region and share our knowledge and good practices. Today, I believe there is a greater need for insurance regulators to connect and collaborate in our increasingly interconnected and interdependent globe, particularly post the pandemic woes. India is now also started its vaccination program, is also manufacturing vaccines and exporting COVID vaccines from India. And a vaccine policy, if it can be developed and be integrated with the health insurance policy, it would be great. In fact, what I was also, I'll give you a bit of what happened in the second Insurance Conclave and Awards 2019, which was organized by the ICC in June in 2019 at Bangkok Holiday Inn. There were 8 participating countries, and those were Thailand, Myanmar, Cambodia, Sri Lanka, Nepal, Bhutan, Bangladesh, and India. 70 top insurance companies from these countries participated in that year's award, with 200 plus nominations and 70 plus awardees. The jury was chaired in 2019 by Mr. Hari Narayan, retired chairman of the Insurance Regulatory Development Authority of India, and the jury panel consisted of retired regulators from the aforesaid countries. PwC was the process partner for the awards, the PricewaterhouseCoopers. The event was supported by Thailand Insurance Institute, Insurance Institute of India, India Thai Chamber of Commerce, the Thai Life Insurance Association, and the Thai Insurance Brokers Association, as well as the Life Insurance Council. The conference was addressed, and that is it was a conference, not only an award, it was addressed by Ruth Sommerhalder, partner of the PricewaterhouseCoopers and head of the insurance practice of PwC in Asia, based out of Hong Kong. Mr. Eddie Tuhirman, Chief Executive Officer, Generali Indonesia. Mr. Tadhap Sujitjon, President, Thailand Insurance Institute. Dr. Sondar Wu, Managing Director, Myanmar Insurance. Mr. Arunava Baug, Chief Technology Officer of TCS Digital. Mr. Sri Ramachandramurthy Edara, Principal Consultant, Tech Mahindra. And Mr. Anon Vargasu, President of Thai General Insurance Association and Chairman of the Federation of Thai Insurance Organization, was the chief guest for the award function. There were many awardees, so I would not like to mention the names of the awardees. This year is a new year, and we would like to have, of course, the old participants are there. There will be new participants. There will be new awardees. And the impact of COVID-19 on global insurance market has been felt throughout, not only in the asset markets or capital markets, but especially also in the insurance industry with weaker premium growth prospects. And however, I think if we look back into the history, unfortunately, I don't think, and nobody thinks, that COVID-19 will be the world's last health emergency. And learnings have been there. If you only look at the respiratory and the pulmonary impacts that we have had. 100 years back, we had the Spanish influenza. There were certain learnings from there. In fact, the social distancing and the masks actually were adopted after the Spanish influenza, during the Spanish influenza. During the SARS, there were certain learnings, but it was not a global pandemic like what we have today, and this is unique. And this has had put insurance companies in the center of the storm. In a matter of hours and days, many of the insurance companies had to make their entire operations remote. They were having to deal about changing coverage, attending to the business interruption policies, and continue paying claims for life, health, and disability insurance. Nevertheless, across the countries, across Asia, insurance companies have dealt with the crisis exceptionally well. But how it has dealt and how they have moved forward and what are the strategies for the future, we would like to hear, we would like to know, will be largely due to investments they had already made in networks, in applications. However, it has pointed the gaps and vulnerabilities in the system. And now is the time to make strides to fill those gaps. Thus, issues that we need to address now, amongst others, with respect to handling current and future pandemics, could be: how are we adapting our business strategies to accommodate a new way of working, and what betterments can be brought in to make it more sustainable? The other area could be how do we accelerate digital transformation, investments in additional technology, in customer data analytics, in artificial intelligence, to integrate mobile apps, websites? How are the companies placed to transition to leverage these artificial intelligence and implement other bionic capabilities to employees and make better informed decisions and focus on higher value work? How to make the existing workforce adapt. This is very important to the new way of working through trainings. How would we involve employees in delivery as well as those who handle service and operations? How are companies reassessing their asset liability management strategies to balance yield with risk-based capital risk requirements? Business interruption insurance is also gaining a high profile as the crisis has evolved. A major focus of health insurance is, of course, prevention of relapse for patients. Is there any focus on immunity building and testing strategy, on vaccination? Do companies need, public and private support? Like what we have in India and other countries also, corporate social responsibility benefits for contributing to the pandemic funding. So these are the many areas that we'll be discussing today. Also, what we will be having now is a kind of a small panel discussion for about 45 minutes to an hour on how to handle current and future pandemic and an Asian view. The members of the panel are Mr. Joydeep K. Roy. Is the Global Health Insurance Head of Insurance Practice, PricewaterhouseCoopers. Is the Global Head of Insurance. Joydeep Roy, welcome. We also have with us Mr. J. Harinarayan. He is the ex-chairman of the Insurance Regulatory Development Authority of India. And also he was the jury chair of the third, will be the jury chair. He was also the jury chair in the second. He will also be the jury chair for the third Emerging Asia Insurance Conclave and Award. Welcome, Mr. J. Harinarayan. Mr. Shudhin Roy Choudhury, he is the ex-member Life IRDA, as well as he was in the jury chair in 2019. Mr. Bonik, Nobogopal Bonik, comes from Bangladesh. He is ex-member of the Insurance Development Regulatory Authority of Bangladesh. He is with us. He is also in the panel. And I myself is Mr. Atanu Sen. I am the chairman of the Indian Chamber of Commerce, looking after the banking, financial sector, and insurance committees. So I will be coordinating, and there is not much to coordinate. They are all, the experts in their fields. But having said that, there has to be a coordinator. So I am the coordinator of the panel. To begin with, I think I will request Mr. Joydeep Roy. Mr. Joydeep Roy, in fact, PwC is the top, amongst the top 4 consultants, and you are you are the global head of health insurance, and this is you are the person whom we say a super expert in this field, and especially during the pandemic times, your learnings must have been humongous, which you can share with us. So, Mr. Joydeep, can you share your learnings during the pandemic, as well as what are the strategies that can or may adopt by the insurance companies in this region or across the world? Mr. Roy.
Thank you, Mr. Sen. You've been too kind about me. I remain a student of an ever-expanding, ever-changing industry. The industry is so interesting because it touches every part of life, from the corporate businesses to retail businesses to people's lives. And so it continues to be an integral part of tackling life and life's crisis. The pandemic time has been no different. The learnings have been humongous, in fact, quite tragic at times, because the insurance industry, for certain risks, could not come to the rescue of the policyholders, and I'm going to mention that a bit. So generically, what has happened across the world is that the pandemic has created 4 different kinds of risks for people. Number 1, the risk of getting obviously affected by the COVID-19 virus and therefore getting treated. And most often people have found that their health covers either, and I'm talking globally, India, everything got covered, but globally, many places, pandemics were an exclusion, and therefore many people could not be covered through the health policies that they had. In many countries, the government has taken the lead and therefore managed the whole the cost of that. But quite a few European countries, it has been an issue. Secondly, so the direct risk has been being affected by the pandemic, going to a hospital, claiming that, finding that it costs much more to treat COVID-19 because of the very nature of this, which has been heavy on consumables and stuff, which normally policies never covered. In India, the regulator, of course, took the stand, and the insurance companies took the stand that we'll cover it. We will cover many of those PPE kits and other things. But as I'm saying, many places in the world, it did not. So what happened? That became the first discernible risk for people. The second risk was that of loss of livelihood and businesses, because the pandemic gave rise to a situation of lockdown and hospitality, then travel, many other businesses which involved congregations of people, events, everything went into tailspin. Well, as is the human nature, over the last so many years and decades since there has been no pandemic, most people did not take a pandemic insurance, and their normal business interruption insurance covered only property. And in this case, there was no property damage. So almost universally across the world, the business interruption insurance which people had did not come to the rescue of all the businesses that went into a tailspin. So that was the second big issue with insurance. The third issue was what happens to pricing of health insurance post-COVID. So while there's a huge demand for health insurance, which has been generated across the world, in especially in areas or countries which did not have much of penetration, the pricing of health policies has seen an upward trend, and that is pretty normal, because any kind of natural catastrophe or pandemic normally drives prices up, just as a natural catastrophe like a flood or a large earthquake, or in earthquake zones, they drive the pricing of the fire and earthquake policies, the SFSP. Similarly, the health policies across the world are undergoing a change in the amount of money that they're going to charge. Anywhere between 10 to 40%, depending upon the country and the kind of costs of medication of the pandemic. The fourth big risk which is coming now is the fact that people are getting more digital, and which means cyber incidents and threats are becoming more and more. So this new way of working, which is getting into homes and working from anywhere, all the time on the net, all the time passing of information, exchanging data, doing the stuff. Literally millions of apps have come through which let you do this, do that. So you're sharing all your financial data and business data as you are transacting in public. And therefore, the important thing, which the fourth big risk is the heightening of the cyber risk, and which in its own trail brings a whole lot of other risks. You know, the way we are working, the kind of fidelity risks, etc., which will come in now, because it's a question of then pinning down the responsibility on who has done it, and as well as finding the cause, stemming the damage, making sure it doesn't happen again, the incident response. So this is something which we as PwC, we spend a lot of time on. So all of these, but cyber is one of the biggest things which is coming in the wake of a health insurance crisis. On a last point I will mention is on the health insurance piece, which is a welcome development, is that around the world, people are finally taking a very strong look at keeping their customers fit. So while many people have been dabbling in wellness and fitness and trying to do managed health care for their customers, so far it had been very small. And right now it has suddenly become very serious and important, and people are around clinical, pharmacogenetic, and various other things to make sure that their customers are fit, and their hospitalization becomes more and more rare. And even if it does, it gets done faster and quicker. So these are the different changes which are happening. Other changes, of course, everybody has talks about in the press nowadays. So that's what I will I'll stop.
Mr. Roy, in fact, you gave an overview of what had happened. But having mentioned, after giving the overview, specifically, maybe many of the insurance company participants would like to hear about the technology area
Okay.
What is required and what needs to be done?
Okay, there's a small noise coming outside my window. These are the things of working from home. As you can realize, there's a drilling going on next door in a construction site, and sometimes it may come on. You have to excuse me for that if it comes on. So, see, technology has evolved from 1950s in an accelerated fashion. So when technology first came into financial services, insurance, it was to help keep records. First instance of technology from 1950s to 1980s was to keep financial records, customer records, client records more as a system of record keeping, so that things can be stored and retrieved. From the mid 1980s to, let's say, 2000, the emphasis of technology was on automating certain processes. So from a record keeping section, technology went on to transactions, and people started doing their transactions, which were limited, largely automation of paper process till 2000. The turn of the century saw people using technology to do things which they were earlier not able to do, which means reconcile, make sure things are working together. But what has happened from 2014-15, and which has got accelerated now, is digital thinking. And therefore, using technology or smart technologies to do things which were not earlier possible. It's not just to automate what you are doing. Example, collaborative workplace. So I'll take an example of blockchain in this, where the distributed ledger and smart contracts are being used in many countries to manage travel claims, health claims, where there are multiple people involved. So there's a hospital, there's a airline, there could be a motor garage, and there's an insurer, there's a customer. So how do you manage transmission of data, authorization, payments all together, and the bank also, whether the account is. So all of these put together, ecosystems are being formed where people are trying to make sure that customers enter an ecosystem, do all the transactions quickly, simply, or even they don't have to do. Sometimes it's done automatically, like a flight delay, insurance, etc., and then they get out with perfect satisfaction. The second bit which is happening is the shift and movement to cloud. Everybody across the world has taken this seriously now. They have realized the advantage of going into cloud to get into using systems which are available to use and pay per use, rather than building large monolithic server bases and their own technology infrastructure. So that's the second trend. The third trend, which we can see happening, is giving the right to the customer. So more and more people are bringing all their transactions, services, claims, even application, everything to the customer in a small screen, which is not getting larger, and neither are fingers getting smaller, and therefore the emphasis on voice, data, image, rather than typing or filling forms. So give the right to the customer, give them options to either speak out or tap, and things will get done. This is where insurance industry learning from other industries which have done this well. So these is empowering the customer with technology, including empowering the distributor and the surveyor with technology, more and more, make them really empowered with those of things. Then collaborative working ecosystems, creation of the ecosystems where hospitals, garages, banks, everything will work together. Third is moving infrastructure to cloud, are the three large trends which you see. And as a result, what is really coming out is that the new skills which will be required for workforces. Earlier, we used to teach people the workforces, collaboration, working together, behavioral skills, etc. Now it looks like transactive skills and skills to work on tools and applications. Make sure there, that you can get your work done and done very productively, are going to be the mainstays of the future.
Thank you, Mr. Roy. In fact, you spoke about distributive ledgers, blockchains, artificial intelligence, cloud. In fact, and the tools and how the training paradigm will totally shift from collaboration and behavioral skills to technical. Yes, in fact, you also mentioned that you could hear some drilling noise. Technology is taking over. In fact, two of our panelists, Mr. Harinarayan is out of Hyderabad, and Mr. Sudhin Roy Chaudhary is at Shantiniketan, are finding it difficult to connect through Cisco WebEx. I'm sure they will be able to connect in a few minutes' time. But in the Mr. Bonik, Navagopal Bonik, he was, as I mentioned, was the member and the chairman of the Insurance Development Regulatory Authority of Bangladesh. Mr. Bonik, can you hear me? Mr. Bonik from Bangladesh, Dhaka. I think Mr. Bonik is also facing problem. He was there just now. Anyway, what I would, at this point of time, I would request Mr. Amit Roy. Amit Roy is there?
Yes, sir.
Yes. In the meantime, when the panelists try to connect, I would request you to give announce what is going to happen during the third insurance award. What kind of awards would be there? How we will take it forward? How will PwC sort of connect and be a part of it? In fact, as I mentioned, Mr. Amit Roy is MD Domestic Insurance Business of PricewaterhouseCoopers. Mr. Roy.
Thank you so much, sir. Thanks for the opportunity and very good afternoon to all the participants, all the panelists. Individually, I am pretty excited about what we do with ICC in terms of awarding the best of the best across Asia in these great award categories. Why I say great award categories is because, as you all know, in the industry, quite a few awards happen. But the way the awards have been decided for this particular event have been very different, and which is why we as PwC participate with a lot of enthusiasm. The way the awards are decided are also pretty unique. It's not just on the basis of how much business has happened. It's not just on the basis of how long you have been there in the business. Also not on the basis of the profit, but very interesting calculations and some of the very interesting insights that we bring in from the company to decide the best of the company, the best of the awardees. In terms of categories, well, we have a not unlucky but lucky 13 categories that we awarded last year, and I'm sure those categories will be there, and there could be one or two inclusions in that. And some of the awards are actually very interesting. We start with the best insurer on the life category. Then we go to the best insurer for the general insurance category. Then we have the most unique award, and Joydeep was just talking about the pandemic and the health insurance as a whole. So on that, in terms of, yes, Shantan, can you bring the category? The third category is something which talks about health coverage. And as Mr. Sen was talking, I was wondering that ICC as an organization possibly could have seen that there could be a forthcoming risk coming. And you can see the third category talks about the coverage of health insurance. And that's a category which is not there in the industry at all. The fourth one is also very interesting. In terms of technology, you just heard from Joydeep that there's a lot of new technologies coming in. Now here, the award is given to the companies which are most adaptive in terms of the emerging technology to bring in the better customer services. So can we move to the next slide, Shantanu? The next one is also on the very core function of the insurance companies, and it's around the risk management strategies. I would like to pause here and tell you that how we decide this is just not decided on the basis of the number of complaints that company receives or the claim settlement, but it's a mix of different other parameters also, including the kind of persistency that they maintain, how fast they negotiate with the customers, what kind of solvency margins are maintained. So a very unique combination to decide which are the best companies in this. The next one is also in terms of insurance spreading across Asia, which is there any question from anyone? I think some noise. Okay, I'll continue. So in terms of this, the large continent that we have in Asia, the spread of insurance is very important. And in every forum, we talk about penetration and all of that. So the companies which are actually addressing the need of insurance spread, ICC award them, ICC recognize them, and that's again another unique thing. Innovation is there in everyone's mind, and the jury have been kind enough to decide that this should be one of the categories where we decide which are the best companies. And it's just not about technology, it's also innovation around product, it's innovation around process. And this is an award which actually created a lot of enthusiasm across the companies, because this is something on which you find changes in this dynamic world every day. Next one is in terms of customer centricity. And this award is something which actually goes a long way in deciding the customer centricity of the organization through different lenses. And not just claim settlement, because insurance, particularly in life and health, has got a lot of technicality. And the companies which have been really transparent, who are engaging with their customers, distributors, who are actually spreading the insurance context for the real need of insurance, they normally get the award. Shantanu, we go to the next slide. The next set of award actually starts with a very interesting award. And ICC is unique in terms of recognizing women in insurance. And this award actually created a lot of enthusiasm in the industry, because insurance is one industry where you find large number of women in different roles. And this award is decided again on the basis of various parameters, and we will continue to recognize the best of the best in this field. Last about a decade, crop insurance has really come up to the carve in India. And India being such a big country with agriculture, not just India, but all over Asia, the crop insurance is something which has gained ground in the last 10 years. And possibly in terms of volume, we saw that in India, but then across Asia, crop insurance has moved up from a 8% coverage to about 22% coverage. And what are the best practices for crop insurance, including how fast the claims are settled, are judged when we are judging the best in crop insurance. We talk about insurance, and insurance is never complete unless and until you have the reinsurers. And this is a unique award possibly given in the industry. At least I have not seen that, best reinsurers award across the region for life general health is given. And this is very interesting. And every year we are seeing more and more reinsurance companies participating into it. You would agree that insurance for the real people who need it may not be affording a lot of money, but some of the companies are doing great job in micro insurance. And ICC again decided to honor those companies because they are the real need of insurance is very much there. Now, another quick reference to the uniqueness that these award categories have is that ICC did not restrict itself only to insurers, and I'm so happy that discussion happened, and the people who spread the message of insurance in the right way, who take the pain of distribution of insurance, the broker fraternity, they also get rewarded in this. So ICC rewards the best broker of the year across the regions, and I'm sure that there could be some more innovative awards. So we'll stop here. These are the categories that we had till now, and if there is any question, happy to answer them. Over to Atanu sir.
Thank you, Mr. Amitra. If there are any questions, you can send the questions. In fact, I will take it up one by one. But in the meantime, I think the technical glitches that were happening, the Santiniketan glitch, I think we have been able to sort of come out of it. I can see Mr. Shudin Roy Chaudhary, ex-member Life Insurance of IRDA and Executive Director of the Life Insurance Corporation of India. He is also one of the panelists. So, Mr. Roy Chaudhary, we have been discussing about many aspects of, the change in the insurance industry because of the pandemic. what has happened and what could be the strategies for the future. You are very closely connected with the insurance industry. You know insurance industry like the back of your hand. Can you just sort of enlighten us regarding the what has happened during the business interruption? What kind of insurance has gained a high profile in the crisis? And not only the companies, even for the brokers, how have they tackled and what are the needs of the customers at this point of time? Mr. Roy Chaudhary from Santiniket. You are muted, Mr. Roy Chaudhary. You're muted. Yes.
Hello, can you hear me?
Yes, please.
So the main problem during this pandemic last year, that is right from the end of March, Rajushree, can you tell Sangeet that I have joined because she's constantly telephoning me. Anyway, so what we found is that right from end of March, April, May up to June, there was complete lockdown and there was hardly, when everything had stopped, nothing was being done. And we in the insurance industry was wondering what to do. And many suggested digital marketing, everything. There was a huge euphoria, digital marketing. But in the end, it was not exactly digital marketing. It helped a little bit, but not in a full way. But then we insisted that along with digital marketing, you see, unless we move our foot soldiers, they will not be able to do. But then the biggest problem was foot soldiers were not willing to move. People were not allowing to meet and not willing to meet the foot soldiers. What to do? So, what I gather from LIC is that because they did a very good job, they had a 17% rise during the pandemic, which was not the case with other insurance companies. So what I heard that is that they really did a lot of digital marketing in the sense that their digital platform was well equipped and they were able to sell because of the large base and inherent, not only base, they had a pan-India full-fledged operation going on, how to beat the pandemic. But one thing which I heard from LIC is that because it was coronavirus, they harped more on the virus and entered people's homes with masks on and everything. And they were able to sell a large number of their own policies because for the first time, people were very, very scared about this disease. And further down the months, that is after maybe September, October, November, and all these months, our agents were moving in the field. Even private players were also moving in the field, not to that extent, but they were moving. My own broking company, they also did a lot of business, particularly online, because motor car can be done online, and we were doing a lot of business motors online. We were doing a lot of health insurance business online. We sold thousands of policies of Corona Kavach online. But we thought that why don't we approach these micro insurance companies, because they were facing the brunt because they were not able to do much of business. So we approached a big micro insurance company in Eastern India, and we said that we will insure all your clients. Why don't you engage us, and we'll also help you. In fact, they helped, and we could get a very, very large, huge premium from them. So overall, I think the pandemic has taught us many lessons. One is that we have to now seriously think of how we can do digital business. Number one, this pandemic has already given us a lot of scope and thought processes, models of what to do, how to sell during this pandemic situation. As you've seen in China, the second wave of pandemic has started. They have already built 3,000 cubicles for the next variation of virus which has attacked Wuhan. We have to also be prepared for it. Here that and in some other cities, the coronavirus is spreading again like anything. Calcutta, which was a little bit dormant, has again started seeing a lot of rise because for the inherent reason that people are not taking those precautions. But coming back to insurance, I think digital insurance marketing, we have to do many things, not only through digital. That is, people will come to us digitally. No, we have to, sort of educate customers that you need insurance. And what I think we can do best, I'll tell you from my practical experience. We had a group of people who started contacting the customers over telephone and telling them about products. But the health insurance products we were able to sell in a large extent during the coronavirus period. And of course, the motor vehicles. Yes, over to Mr. Sen.
Thank you, Mr. Roy Chaudhary, for giving us, in fact, what Mr. Roy also earlier mentioned, Joydeep Roy, technology, artificial intelligence, all these are coming to the fore, and also in the insurance industry, it will play a big role. At this point of time, before I come back, I have a couple of questions maybe at the end, and I'm also looking for questions from other participants. But now I would like to hear the Bangladesh experience. Mr. Bonik is with us. As was mentioned, Mr. Bonik was a member IDR and chairman of the Bangladesh Insurance Regulator. Mr. Bonik, what is the experience in Bangladesh and how the insurance industry has fared there? And are the strategies any different, any specific strategies that they have adopted? Because Bangladesh, we understand, has tackled the pandemic quite successfully. Mr. Bonik, can you hear me?
Yeah,
Yes,
I can hear you.
Yes, Mr. Bonik.
Yeah, please. Namaskar to everybody.
Namaskar.
Here in Bangladesh, actually, I'm prepared with the steps taken by the Bangladesh government regarding pandemic and way forward, and not much, not too much about the insurance industries here in Bangladesh. Uh, Regarding pandemic issues. But I have learned that the life insurance companies, um, although they have not fared well during the pandemic, due to obvious reason, but many of the companies have done very well. And regarding health insurance, people are not that much conscious here. I think after pandemic, there will be, if the companies takes proper steps, people will be convinced to take the health policies, and there is a huge prospect in the market. So if you permit me, can I give some idea regarding what Bangladesh government have taken steps to handle the pandemic at present and future?
Absolutely, absolutely, Mr. Bonik.
Okay. Actually, the first three cases of uh, the country confirmed on 7th March 2020. Two of those affected returned to Bangladesh from Italy. You know that huge number of Bangladeshi people working Italy, and since then this spread, and Bangladesh government had taken it seriously, and they have taken economic and public health steps to mitigate the damage. To support the national economy, government has announced 11.90 billion US dollar stimulus package. Moreover, they have Bangladesh government has formed National COVID-19 Response Committee, cancellation of grand celebration. You know, this year is the centenary year of our father of the nation, Sheikh Mujibur Rahman. They have cancelled all grand celebration, and again. Uh, Closure of all government and private offices, closure of all institutions, educational institutions still closed, ban on public gathering and transport services, suspension of all, like other countries, domestic and international flights, and distribution of rice at 10 taka per kg. And financial packages include extension of loan to industrial sector at reduced rate, and government will bear, say in most of the cases, borrower will have to pay only 4% rate of interest, and government will bear 5%. And the garments industries, which employ 4 million people in Bangladesh, and our the workers working abroad are the main pillars of Bangladesh economy. Uh, Almost $18 billion sent by these Bangladeshis working abroad, and these to their families are also, because most of those employees are losing their jobs, but they are although the remittance amount has increased, but thing is that the people are losing their jobs, and they coming back with huge money, retired benefits, and that's why the remittance amount have increased. Whatever, as a result of different steps by government, the economy has taken the real shape, and actually our economy has not suffered a negative growth. More or less, um, now has regained back its original glory. Export figure shows that they have increased export to other countries. And in insurance sectors, one interesting thing is that in the non-life sectors, though business has not increased, but due to strict enforcements, their profits has increased. There were some anomalies in their balance sheets, but now those companies, since their compliance of rules regulation, they have increased their profit. And these are the seniors of Bangladesh regarding pandemics.
Thank you, Mr. Bonik, for giving
Yeah.
us an overview of what has happened in Bangladesh. Different governments have taken different strategies to reduce the suffering of the population. In many countries, the enforcements have been quite strict, like in Singapore. In other countries, it may not have been that strict. But Mr. Roy, a question on this. Mr. Roy, Joydeep Roy? Yes,
Yeah.
a question on this, because see, we are all talking about, precautions have not been taken, whatever they be, the distance, social distancing or masks and things like that. But with vaccine coming in, do you think there will be a drop in premiums in insurance, life insurance with vaccines? Those who have taken vaccines, a different category of, cohort, and those who have not taken vaccines are being charged higher premiums. What is your view on this?
So I think ultimately, whatever we'll find is level in the sense that both for vaccination and for insurance. So if you can first talk about the vaccination. Vaccination now has got a clinical, medical angle of discussion. There's a political angle of discussion. There is also a psychological angle of discussion. So if you think that all this will somewhere get resolved as people figure out how what are the impact of vaccination is going to be, I mean, what kind of impacts are happening, then over a period of time, which is let's say 1 year from now, you'll see largely people are all getting vaccinated. Now, remember, this is a flu vaccine for a highly mutative genetic virus, which means one vaccine is not going to be enough. Just like some of those vaccines which in our childhood we had to take every year. I think this, and the flu shots, which let's say in America are, which are dispensed every year in November. So I think this kind of vaccination will have to become a kind of a therapy for everyone every year. The impact of vaccination on people of different genetic makeups is not known yet. So currently, insurance will always go by the actual calculation of pricing will always go by the say most recent event and the in anticipation of claim value, the severity to be higher than it was earlier. Now, COVID, it is not just the COVID treatment. What is happening is with COVID, people's comorbidities are coming up, which means somebody who had a heart disease which was dormant or which was not requiring hospitalization, or somebody had a other respiratory issue, or somebody had a say the sugar related issue. These are getting pronounced and these are getting aggravated, and therefore the hospitalizations are becoming longer, more chronic, requiring more and more support for years to come. So I would think that for population calculations right now, the price increase which companies are contemplating and are dealing with is here to stay, and it will not change in a hurry. It will require at least it will require at least 2 to 3 years of experience post-vaccine, and that too the experience which will be manifest in the long tail of the claims. So actuaries will look at the long tail. They will look at what's happening after COVID, what is happening to an asymptomatic person who might not be requiring hospitalization immediately, but what if they have a heart attack tomorrow? Is that heart attack going to be more severe? So the issues are so nebulous and so uncertain. The uncertainty will drive the prices up, and the price increase is here to stay. On the other hand, for the business interruption thing, which is a very important one, where there's increasing pressure from user groups, associations, and governments and regulators on insurance, you might see a lot more strictness on the business interruption with pandemic being a clause, which will be actually impossible for insurance companies to deal with on their own. So reinsurers have to come to the fore. Many countries already, there are talks of having a separate pandemic reinsurance to be formed. In India, there's a talk of a pandemic pool being created. So many mechanisms have to be formed to deal with such incidents, which are far more than the healthcare costs. So I think the manifestation of these will be felt in the next 5 years to come, and we will continue to be on a hard market with high prices.
Thank you, Joydeep. Any questions that may have come, or Mr. Roy Chaudhary or Mr. Bonik, would you like to, sort of pick the brain of Mr. Joydeep Roy on any insurance aspect, or vice versa, Mr. Roy picking the brain?
Of course.
Okay. Any questions?
So I have two questions actually, one to Mr. Bonik and one to Mr. Chaudhary, if I can ask them.
Yeah.
Sure.
They're far more senior and you have seen much more in the industry. So one to Mr. Bonik. Mr. Bonik, you talked about the migrant labor, the massive population of Bangladeshis everywhere, and Italy in particular. Now, and I've personally been, always been amazed with the number of Bangladeshi people. Actually, the pleasure of speaking in Bengali to almost all shopkeepers or every tourist destination and hotels in Italy. It has been a great, pleasant surprise whenever I visited. So, how do you think that the whole issue of spreading of virus through that will affect immigration in the future? I mean, immigration strategies, both from Bangladesh's point of view of preventing concentrations. You never know what new things. Mr. Sen also talked about the fact this is not going to be the last this thing. But do you think Bangladesh, which has a very high proportion of immigrants, from Bangladesh out, will this experience come in and to tinker with any policy document?
No, I think actually most of the Bangladeshis working abroad, there are two classes of Bangladeshis. One you see the unskilled laborers and another settlers. In Italy, most of the Bangladeshis, they have already settled. They are not workers actually. They earn their livelihood from say selling goods at footpath or small shops or serving in the, but they have become by this time citizens of Italy. You see, there is one, I know you have heard the name of Madaripur subdivision of Greater Faridpur district. I know there is a new district called Shariatpur. Almost every house has one in Rome or Italy. Almost every house, and if you visit that place, you will be astonished that everybody has a building there. Whatever, but one thing that the unskilled laborers, they are suffering because they are suffering. They are coming, they are losing their jobs, they are coming with huge money with retirement benefit fund. But one thing, just recently we are hearing that actually development will occur everywhere and they will require laborers, no doubt of it. and Bangladeshi unskilled laborers have a very reputation in the world. They are very sincere. Therefore, I think Bangladesh will not have to worry about this remittance section through unskilled laborers. And those who have settled in USA or say Italy, they are also and Saudi Arabia especially mentioned, the source of huge remittance to Bangladesh, $18 billion annually. Last year it was $18 billion. I think we don't have to worry much about it. Recently, Malaysia have sent signals about, say, taking Bangladeshi unskilled laborers from Bangladesh.
Yeah, absolutely. Okay. So yeah, I flip it. Great. Very interesting, actually. And that thing about the Italy and Bangladesh, that particular district is, I think, an eye opener. So my question to Mr. Rajchodhuri, sir, are you there on the line?
He's there on the line, sir. Unmute yourself, sir, Mr. Rajchodhuri.
I just want to make sure since he's Shantiniketan, the connection is pretty good, by the way, in Shantiniketan.
Can you unmute yourself, Mr. Rajchodhuri?
Mr. Rajchodhuri?
Sorry. Yeah. Hello.
Yeah, sir, Jolly here. I just want to have a question. I have a question for you.
Yeah.
See, this is something which, you and I have also spoken earlier, and that was right from 2014-15, there's a trend which we see in Indian market a lot. And I can see the trend in some other markets now. In my global role, I see it, but not as pronounced as an Indian life insurance, which is the preponderance of single premium.
Yeah.
So if you look at the figures today, let's say December figures, now if you look at regular premium market, LIC only has 35% market share. 65% is now private sector. Whereas in single premium, LIC has a massive market share. And in LIC's book itself, just to maintain the growth, LIC is less than 13% of which is regular premium. The policy that we used to always know LIC for, which is long-term savings and life cover, which was very important for customers to have small savings because the LIC reaches. Now that has been substituted by a very large single premium business. Now, what do you think is going to be the outcome? Only 13% of business being regular and 87% being single premium. And if you look at the private sector business, that's actually 50% regular premium and 50% single. So it's a difference. So first of all, what does it mean for LIC? And second, what does it mean for Indian life insurance market? Because when we talk of penetration, that doesn't happen by large value single premium, right? So what are your views, sir, on this?
See, I have spoken about this with the LIC chairman as well as the LIC MD who was looking after marketing, Sushil Kumar, who retired. Sushil was also very much in sync with me, and he said that from now onwards, they will try to push more of yearly premium policies and single premium. Now, why single premium rose for LIC was because some of their products, like annuity products, like your Jeevan Shanti and all, they were giving very good returns. Long term, they were giving very good guaranteed returns. And they were all single premium products. You put 10 lakhs or 15 lakhs or 20 lakhs and forget, after 5 years or 10 years, you start getting your monthly or yearly annuity for the rest of your life. And the product also ensured that on death of the annuitant, that entire corpus of say 50 lakhs or 1 crore, whatever they have put in, will be returned with another 5 or 10% addition. Now that was a big allurement to the customers, and that is why you'll find last year in the month of June, October, November, LIC's single premium rose like anything. And people pumped in about 3,000, 4,000 crores of premium they got from these sort of policies. Now, those policies have been reintroduced in the market, but with a lesser return. And customers, agents also feel happy because if they sell a 1 crore single premium policy on this, they get 2% commission, which is 2 lakhs. Now, if they sell a 1 crore annual renewal premium policy, they'll get only 5%, which is not much. So they preferred, and it's very difficult, not much now, it's very difficult to sell 1 crore annual premium every year. So they switched over to all these single premium. Now the problem with LIC was that the large amount of single premium, they have a lot of money for investment in the share market. In the share market, they invested, but their cash flow got a hit because after a few months they were not getting so much of premium. Only they had to depend on renewal premium and whatever premium was coming by way of new business. But their single premium ensured that their market share in premium went up to about nearly 75%. Now the fallacy is that next year they will not get that premium unless they come out with again that policy, and that will be a big problem for LIC. So LIC has started rethinking on their marketing strategy and again pushing policyholders towards our traditional money back, children's money back, and those traditional endowment policies like this. But of late, LIC has also got into mutual fund SIPs, which is very lucrative for the millennium customers. And that is how they have been able to capture the market. But one question to you, Joydeep, is digital marketing. Again, they have switched entirely to digital marketing. They have closed down all their branches. Now, digital marketing, is it the answer in totality for life insurance? To me, I think we are still not prepared for a large-scale digital marketing. Although we may shout from the rooftop that digital marketing karo, but I don't think it will help a lot unless we have a very, very easy IT network where I just press 2 or 3 buttons and I can get a policy quickly. Am I correct?
You're right, sir. And in fact, there's a very important issue you've raised on simplicity of policies.
Yes.
So simple life cover, which is a basic first level things, can go very well with people, say almost through AI, through social media, through things. Insurance company can make out the person's underwriting ability and then push simple policy. You only need to say yes and everything is done. This is the policy. There's not much of calculation, not much of things to really understand. You pay so much. If you die, you'll get so much. This kind of term policy for a basic level of bridging the protection gap. India, Bangladesh, Indonesia, Myanmar, Vietnam, Cambodia, Latin America, African countries. This is absolutely required. And since smartphone is going almost ubiquitous, this is going to help. The moment we move up to financial planning, the moment we talk about options, money to be put in where there's a return, money to be put in where there's kind of options of a premature withdrawal, etc., all these kind of situations, one will need a discussion, and a discussion will invariably take place with a human being. Now, my view here is that discussion, instead of happening face to face, sitting next to each other, will more and more happen in two ways. One, it will happen first face to face, but that too aided by a technology tool, so that the knowledge of the person is enhanced by tools. Let's say calculation of the right amount of insurance, calculation for what would happen if you take this amount for yourself, this amount for your kid. All those calculations ability will be given to the person, so that knowledge is not a obstruction for having a very good discussion. Having done that knowledge, had done the discussion, having established the trust, I would expect the second and the third or the fourth discussion to happen remotely between the agent or the distributor and the customer, because the establishment of eye-to-eye meeting, a bit of trust has happened. Then the next, because all of us know that such sales do not happen in one sitting. It happens in 5. The next discussions may happen online. And then the final sign up then may happen by the person pushing a technological signature tool to the customer, saying, you just now press here, the rest I will take care. Very similar to the earlier discussion. You fill in the form, you just sign here, I will fill the form. Now it will become something that you press the button. So I see technology aided distribution to be almost the norm in 3 to 4 years time for every financial product, and for very simple health, simple accident, simple life, which is uniform, regulatory imposed uniform kind of thing, where the conditions leave no question to be misinterpreted, to be done remote just like that by pressing a button without a distribution person. That's my answer.
In fact, I was listening to this very interesting discussion. At the beginning, Mr. Roy Chaudhary mentioned about life insurance corporation and the kind of asset liability mismatch that is happening or that may take place.
Totally.
So now, Mr. Roy, in fact, with your knowledge about other countries also, and also in India, do you think there are, hedging opportunities and hedging strategies for these asset liability mismatch the insurance companies may adopt?
No, it's a fantastic question. In fact, this is something which has been occupying a lot of my, you can say, interest for the last couple of years. And I've studied quite a few now to be able to tell you that certain misconception. Let me first get out of the way. We normally, whenever we think of an insurance company accepting money for 20 years, 30 years, and saying, I'll give you a pension later on, we expect the insurance company treasury to invest it in a bond or something which also has a similar duration.
Correct.
Normally. And therefore, that's the way we try to. But that's not true anywhere in the world. Okay, limited amount. I'll tell you how it is true in a very limited way. Let's say country like Thailand, country like
Nepal.
Nepal, countries there. The government comes out with bonds only for insurance. So Thailand, for example, there are long-dated bonds which come out, and within 2 minutes you'll find they're subscribed because insurance company treasuries are waiting to take them up. 30-year bond, 40-year bond. So as a result, you'll find that today in Thailand, more than 70% of all the long-dated government bonds are only subscribed by insurance companies. Now that is a fact. It can also give rise to its own concentration risk. However, asset liability match is managed by most companies globally by two methodologies. One, of course, hedging instruments. Instruments will hedge that. Those hedging instruments have to come out. That depends on overall market maturity, the quantitative, the quant tool availability. India is somewhere in the middle there, still not up there like a London market or a Singapore market. So those are still not available in rupees here. If insurance companies in India, for example, are allowed to invest abroad, they can use those hedging tools abroad, invest abroad. But what is used by many companies across the world in developing countries especially is equity and real estate. So equity and real estate technically have a duration which is infinite because you can hold them as long as you want. But of course, there is a useful life value which is taken for calculation. And that comes and hedges and comes to the rescue of the asset liability mismatch for the larger companies, LIC included. So a healthy body of equity, which is on going concern basis, and real estate investments, or even metals and commodities, can be extremely useful for insurance companies to manage this seeming asset liability mismatch when they sell very long dated pensions or whole life or dual life, this kind of policies.
You're absolutely right, Jayanto. Joydeep, because I find that in LIC also, whenever there's a shortfall, they actually look forward for the next 5 or 10 years. And every year I find whatever is the shortfall from that bond which they had purchased and the payments which they had to make, they sell the equities and take that. They sell the equities and make a profit of, you have seen in the newspaper also, 25,000 crores profit they make. And from that, they settle the claims. That is how LIC hedges.
Yes, as of now, there's no worldwide standard for mark-to-market for either equity or real estate for insurance companies. But with IFRS 17 and other risk-based capital coming in, and with convergence globally, we might expect to see by the next 10 to 12, 15 years, that's a long time, but 10 to 15 years it will take the emergence of real mark-to-market for any of these, which will prevent risks from happening, as well as show up actually it will show the immense value that globally the larger insurance companies have, which is right now totally hidden.
Right. Yes. This is for the regulators to look at across different jurisdictions. Now, I think since we are running out of time, I would request Mr. Amit Roy again to come and give again a little bit of flavor of the award ceremony that is going to take place and any other, updates we'd like to give. Mr. Roy, Amit Roy.
Sure, sir. Thanks. I think a couple of updates. I think a few questions came up in terms of how the awards are judged, and maybe I give a clarification of a few categories. Like when we talk about the best life insurance company of the year, I mentioned that we don't only look at the top line or the profitability of the company. We also look at claim settlement ratio, net worth, shareholders' capital. We look at persistency, not just for 13th month, but also for 61st month. We look at new business premium, but not just in totality, but a CAGR, what has been the growth. We look at number of complaints received per 1,000 customer. We also look at investment in training, that's pretty unique. We look at number of services that insurance company, they are actually providing, and are they really certified. When it comes to the general insurance company, the parameters are different. And let me read that out for all of you. We look at a ratio which is technical reserve to the net premium. We look at combined ratio. We look at CAGR of premium. We look at shareholders' capital. Number of complaints obviously becomes extremely critical for any PNC organization, company. Then we look at claim settlement ratio, and again, investment in training. I think the third one, which actually triggered a few questions in the mind of people, is that how do we judge the best broker? People were curious about that. Let me say that on that judgment, obviously the new business growth has to be seen in terms of CAGR. Number of insurance company with whom we were working and whose policies are getting placed. Number of claims settled vis-a-vis number of claims raised by the client, because as a broker, we expect the companies to actually be the bridge between the customer and them. Persistency ratio, obviously, and average number of complaints per 100 customers. I believe a few people also wanted to know about what is that women in insurance leadership. Is it only about an individual judgment? Well, let me clarify that. Obviously, in terms of individual candidate, we would like to see number of years in the top management role and the details of the role. We also see how many unique products are there in that company which caters to women specifically. The third one is very interesting in this for judgment is what is the total number of employees from what is the total number of women employees that the organization has in a ratio of the total employee. And how we do this is obviously there's a nomination form which will come on ICC website. You can download from there. And June would be the last date for submission of that form. Remember that, let me repeat, June. And I believe exact date will definitely communicate individually to all of you. And I expect the preparation to start from now. Over to you, Atanu sir.
Maybe the weightages also we'll be looking at, because
Yes.
During the course of discussion, we found that investment in training is coming to the fore, because more of, what Mr. Joydeep Rai was mentioning, from behavioral aspects, they would be important, but more focused towards technological and reiterative, transactional areas. So how do you train these people? Because of artificial intelligence and other technologies.
Absolutely. Yeah.
Yeah. Thank you, Mr. Roy. It is you clearly explained how the awards would be given and what are the criteria. In fact, since we are coming towards the end, I would Dr. Rajiv Singh has joined us. Mr. Singh is the Director General of the Indian Chamber of Commerce. And he is also traveling. He's now at Pune, so he's also connected from Pune, I gather. So, Mr. Singh, I would request you to give your closing remarks and the vote of thanks, please.
Thank you. First of all, I'm so happy to see all of you personally. I think COVID has changed our lives, and it has been very, very challenging last 11 months. But the good thing is that all of us have been able to pause, take stock of things. And I also see some benefit, which I think I have gained, and maybe ICC has also gained. And I speak to many members, and they also say that this COVID has given them some time to pause, reflect, and bring in some improvements. And as a country, I think India has managed COVID very well. Country which was deficient in masks, ventilators, and other equipments has been able to cope up. India has its own vaccine, and the number of cases have gone down. Although, I mean, last 7-10 days, one sees some small spike in some states, Maharashtra being the leader. But overall, I think things are improving. A lot of good things are happening. The occasion of this meeting is the Emerging Asia Insurance Awards. Here, I would like to thank Joydeep Roy and Mr. Amit Roy for their continued support and making valuable value addition in terms of the process partner and guiding us through. I would also like to thank Mr. Sudhin Roy Chaudhary for being a mentor to this whole process and very, very supportive to all of us. I think we are missing Mr. Hari Narayan. He could not join us, but I'm sure he's there and we will connect with him. I would also like to thank Mr. Nabagopal Banik, who is part of the jury and the process from Bangladesh. Last but not least, I would like to thank Mr. Atnu Sen for being with us throughout and helping and guiding us. I think you must have heard that we will have to, I mean, last 1 year we could not hold the event, but going ahead, we are planning to hold it. In terms of location, criteria, everything has already been briefed. So we at ICC are excited to engage again with the insurance industry, and we look forward to be in touch with all of you. And I would encourage all the participants here to file their nominations and also to spread the word in their own respective countries to the insurance companies to participate. With these words, I would like to thank you, all our esteemed partners and also the participants. Thank you.
Dr. Singh, thank you very much. But I think, I from my side and from Amit's side, I think we should also thank the enormous energy that Shayantan and Rajeshri bring into it, because they make sure that we are always on our toes. We do the right things. Whatever we do in the midst of all the work, they make us do it at the right time with the right amount of involvement. They are the thread that keep us together. Thanks to them. And we are always extremely excited to be associated with this award. Amidst others, because this is one of the very prestigious awards, which is based on scientific method and manner, and that's what gives us the I could say also privilege to be attached with this. It is amazing the way it's developing. In the next 5 to 10 years, this should become the #1 award in Asia.
Absolutely. Thank you.
Thank you, Mr. Roy, for the good words. Thank you, all the other panelists. Thank you, Mr. Singh, and all the other, participants in the webinar from the various insurance companies across the countries. Across the countries, we know there are participants from Bangladesh, from Nepal, from Bhutan, from Myanmar, from Sri Lanka, from Singapore, and also Thailand, of course, and Indonesia. So I thank all the participants who have joined us today, and especially also the participants from India. Thank you so much. Do join in the award ceremony. Do help us take it forward in these difficult times. We didn't have it last year, but one in 2019 and 18 in Thailand was a grand success. We are looking forward to take it further down the line. And this year, as I've told you, would be held in Goa sometime in September. Thank you so much.
Thank you. Thank you, Mr. Sen.
Thank you. Thank you, Mr. Sen.
Thank you.
Thank you.
Thanks, everybody.
Thank you.
Thank you.
We are disconnected.